Hello everyone, Dan O'Brien here, designer of the HFT trading algorithms, and actually another one that we'll talk about briefly, the one at the bottom, a regime switching algo. There'll be another video or two, I'm sure, to go more in depth, but we'll cover it here briefly. So today is December 29th. The market, the S&P 500 is what we're looking at. So the S&P, the NASDAQ, YM, seems like every day they're making new all-time highs, and they did again today on the 29th of December at the open, but then there was finally some volatility as the market turned and went down. And I want to explain to you some of the crude drawings here on the chart. Sorry, I don't have better drawing tools. But up here on the left and down on the lower left, we have a couple of rectangles. And the rectangles are showing us that the market really isn't doing much. It's just the normal auction process back and forth. That happens a lot when our long-term informed HFT and our short-term informed HFT algos are on opposite sides of each other, as one group is trying to buy and the other is trying to sell. What may be even more important, though, as far as a non-trending market goes, is the regime switching algorithm down here on the bottom. And when it's below the white line or down in the red, the regime is mean reversion, or for us traders, choppy, non-trending. When it crosses the white line, gets out of the Brownian motion zone and goes up into the green, you've got higher volatility, which usually means a trend. Well, what we're looking for is to put these non-correlated algorithms together, and it comes out, the price action here comes out of the sideways chop zone, breaks down below the Donchian channel here. It's leading the bottom of the channel, and that's right when the long-term and short-term informed traders, so your very fast HFT traders and your market makers who use HFT algos, are now both very bearish. Inside this crude circle, one of them is about 92% bearish, and the other, the white dashed line, about 80% bearish. And that is right when, looking at the other algo, that crosses the midline and saying, yes, mathematically we should have a trend, higher volatility. And what direction do we choose? Clearly, the direction that the HFT traders are taking the market and the recent price break. So from here in around 37.42, the market drops straight down to 28. A nice 14-point drop. Now, normally, when the regime switching algo is at the top of the green zone, that would tell us that the majority of the move that we're seeing is over. But the majority does not mean 100% of the time. There are some rare occasions where the market is so one-directional that it will trade above the green line and then have a later drop-off. Well, when it finally started to drop down demonstrably and then even trade back from the high volatility zone into the trending, or sorry, choppy non-trending zone, that clearly would be your optimal exit. I tend to bail out before that, especially when it is coming well below where it had been or trending in the opposite direction. So from this level here, this price action here about 37.33, even though the price continued in the same bearish direction, this algorithm was saying there's just not enough momentum to keep it to going higher to 75 and 77 and so on. And in fact started to drop well before the price action did, giving you a clue that the downward direction was slowing dramatically. So what do? Well, if you're like most people and you get that sort of information, can dramatically reduce your trailing stops to as close as you can, maybe a tick or two above the most recent high of the last 2 or 3 bars. And eventually when it makes a bigger pop like this, it'll take you out, but you'll be able to sit through a lot of this move down. Okay, I hope that helps. So a little bit of both HFT algos and the regime switching algo, which is now available on Sierra charts.